People often ask, why do stocks move ahead of the economy? Why do they bottom well before the economy bottoms, and in fact, while the economy is still deteriorating? And why do they tend to peak before the economy starts to drop? And it's in one way simple and another way complex, but the simple part is easiest for you to understand if you just put yourself in the vision of a seller or a buyer. If you were going to sell a lot of a stock or buy a lot of a stock, would you go to the Wall Street Journal and tell them about it before you did it? Or would you do it first and tell them later? And the answer is you trade first and you tell people later. In that, it's a lot like the way the market works as a whole, which is whether people know it or not, what's formulating in their brains tends to go on and translate into action before we get the chitter chatter about it. And the chitter chatter tends to build ahead of the trades. Collectively, the market knows more about what will happen than pretty much any of us do individually, and therefore tends to get the bets about the notion that the economy will turn around ahead, so you don't have to fear the things that everyone's chitter-chattering about at a bottom. And just so, inversely, at around a top, they see the problems before the problems are evident to everyone collectively with the chitter-chatter. Most of us get our views most of the time from what people say around us. But in fact, if you just take this most recent big decline in bear market, the fastest drop off the top ever, it's a fairly short lead time to the function of governments clamping down the economy globally. And yet a normal bottom in the stock market happens maybe 6 months before the economy stops deteriorating, but collectively we know somehow, some way that it will.